Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Abhilash and welcome to Cut to the Chase, the podcast where we focus on market events that truly matter. As we return from a Lunar New Year celebration shortened week here in Asia, it must be said that the US equities have certainly played their role in supporting the holiday cheer. Overnight, S&P 500 reported fourth straight session of gains driven by strong earnings. As we approach the halfway mark in US Q4 earnings season, the average earnings surprise now stands at a healthy 5.3%. On the data front, we saw US PMI data slow down from elevated levels, and last night's ADP private payrolls report showed that nearly 300,000 people had lost their jobs in US over the past month. Now, this is the first instance of job losses being reported in the ADP data since 2020. While historically ADP report has not been a good predictor of the official non-farms payroll data, clearly the risk of a weaker than expected official employment report have increased. Now, on the whole, we think markets are likely to shrug any weakness in payrolls data tomorrow as temporary effect of the Omicron wave, but at the margin, it should ease the pressure on the Fed to hike rates aggressively. A combination of all these events has led to a sharp decline in the US dollar over the past week. So the DXY index has tumbled nearly 1.5% from its year-to-date peak of 97.4, and it's broken below its 50-day moving average. Over the next few days, it would be interesting to see if the dollar stays below the 50-day moving average, as it may signal that this week's downtrend was indeed a turning point for the US dollar. But apart from the dollar, it is a particularly eventful day for the FX markets, as we do have two major central bank meetings lined up for later today. So first up, we have the ECB meeting. But as a prelude to the ECB meeting, just overnight we had the Euro area core inflation data being reported. And while inflation declined to 2.3% year on year from 2.6% increase last month, the overall inflation level was higher than what consensus expected. So in today's ECB meeting, we think President Lagarde will probably need to strike a delicate balance. While we don't expect any new policy actions, we may get some new guidance about the path of QE and even potential rate hikes, especially since markets have priced in a rate hike by September this year. For now, Euro-dollar holds above the 1.12% level, and we think in the near term, the key resistance on the upside could be a band of 1.148 to 1.1525. The other key central bank meeting today is that of Bank of England. Markets are expecting Bank of England to hike rates by 25 basis points or 0.25% today. And in addition to that, BoE could also announce the start of its balance sheet reduction. So on the upside, we are looking at a level of 1.366 for the pound. Before I leave, a reminder that Steve is back tomorrow with his Through the Noise podcast, so please do watch out for that. If you enjoy the podcast, please don't forget to rate and like it. Thank you for listening, and wish you a very happy trading week ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.